Great. So let's start with our today's webinar. Welcome everyone. Ganesh and Bhushan. Is there anyone else other than those? I think these are the people. Hi Ganesh. Hi Bhushan. How are you? You can unmute yourself and you can just. Sorry, Bhushan, your disturbance is coming from your side. Can you just correct your disturbance?
Hello, sir. I'm good. How about you?
I'm good. I'm good, Ganesh. How are you?
Yeah, I'm good.
So, can you give a brief intro about yourself, Ganesh?
Yeah, sure. So, my name is Ganesh Madhukar Sane. I live in Titwala near Kalyan, and currently I'm working in SCL Tech as a SAP FI consultant. And I have done my certification, global certification from ATOS. And I have done my bachelor's and master's in commerce. That's it about me.
Great, great.
Yeah.
What about you, Bhushan? Hello. Bhushan, are you there? I think there is some disturbance maybe from Bhushan's side. Okay, no problem. So I'll just quickly start our webinar, and it is completely a knowledge building. Okay, so I'll just quickly give you the topics. So the topics would be today we are going to straightforward cover the product costing in SAP S/4HANA, actual costing versus standard costing in SAP, actual costing in material ledger, and we will try to take you slightly deep in that. Then cost allocation, common mistakes which normally companies makes in SAP, and migrations. So these are the topics we will take overview of those. Okay. Now coming to product costing. Under the product costing, these are the key topics we need to know: material master, BOM, routing, activity cost, cost breakup, cost release. And
Sharit, just want to know, you are sharing your screen or how is that?
yeah, I have already shared.
No, I am not able to see the screen. I'm able to see you.
What about you, Ganesh?
Yeah, I can see.
Is that okay? Then let me see how I'm seeing it in a correct way or not. Let me see. Yeah. On the other screen I can see. Yeah, sorry. Yeah.
Can you see? Can you all see my screen?
Yeah, now I can see. Yeah.
Okay. Then booking the actual cost, variances, settlement, and after that variances, we can now go and check in the actual costing screen as well. So now let me take you to the SAP itself. Wait for a minute. Okay. So first I'll show you the material master and the product costing of that. So this is the material master as I have explained you. Okay. And now if I go to the costing part of it, this is the costing part. So this is the standard costing system calculated automatically for this particular product, that is laptop. Now if I click here, okay, so this is the detailed standard costing. You can see my screen, right? Everybody can see?
Yeah.
Yeah. So this is the detailed standard cost coming from this. Now if you see, you can just see the tree of this now. So this packed laptop is part, the semi-finished product is naked laptop. For this naked laptop, we need motherboard, screen, display, and all. So for this motherboard, you need, and for that chips, you need some raw materials. Okay, so these are the basically the detailed breakup of the costings, what we need, and all these detailed breakup of the costing is part of this material cost. So, hello, Surendra ji, thanks for joining.
Thank you, Sharad. Thank you so much.
Thank you.
Please continue. Yeah.
Yeah. So, so this is the basically detailed breakup of the product costing for the particular product, that is laptop, naked laptop. These are the things, and this is how you can drill down your total costing. And this is one example we have displayed here. Likewise, you can create more and more own processes. Now, on the same screen, if I want to check my bill of material, I can go to quantity structure, click on that, and I can see the bill of material. So this is the bill of material. You can see the base quantity. You can go to the item and you can see the input of that. Now you can see for one packed laptop, you need one naked laptop and the packing materials. Okay, plus manuals, earphones, chargers, etc. And now, if you want to further drill down from the naked laptop BOM, there is a assembly button. You can click on that and you can continue to the bill of material of naked laptop. So likewise, you can see, you can go down to the naked laptop bill of material. Now, if you want to go to the bill of material of motherboard, you can just click here and go to the bill of material of motherboard, like that. Further, you want to go to the chips, you can go to the chips. So this is how you can drill down to the lowest level from the same material and the standard costing. And now this is the same way, this is the routing of this. You can check this. So this is the setup, machine, labor, etc. So these are the routing and activity types. And this is the work center. Under that work center, you can see this is the costing tab. Under the costing tab, you find the cost center and activity types. Okay. And these are all connected to the routing. And this routing is connected to the material. And this material is connected to the costing. So this is the linkage between this whole product costing structure. And you can see this is the cost component of that. I can show you that. So this is the cost component view. So this view is called cost component view. And this view is called itemization view. Because here everything is coming item by item, like expenditure, material, overhead, etc. All are coming item by item. So this is called itemization view and that is called component view. So this is the standard costing of this entire product, how we can get it. Now I'll go to the one orders. Okay, let's check this order. So this is for one quantity order. So this is called production order. In this production order also, you can check the input material, the operations required, and the costing of that. So the status should be released and you can go to the costing of this. This is how you can check the cost. So this is how you can check the cost in the order. Okay. Input materials, plant cost, actual cost, and the settlement. So this is how the cost is settled. So this is basically the product costing part of it. So there is a variance of 1500 rupees, which is settled now. Right. So this is how you can get it done. And you can check the accounting entries just by double clicking on that. You can check the accounting entries as well. So this is how you can go and check the accounting entries. See this inventory account credit and consumption account debit. So these are all basically part of the product costing and cost capturing at the production order level. Yeah. So now this covers this part from the production order booking, the actual cost, variance, settlement. Now we can go and check these things in the material ledger screen, CKM3N. So under this CKM3N, you can see these are the variances coming for this material. For this material, there may be many process order, and you can check the process order also here. Okay, so this is the process order which we have seen just now, 206. Other than that, there is another process order called 200. So these are the variances coming from these two orders. And these variances are getting accumulated here and will be utilized for the purpose of calculating the actual costing of it. Now, other than these variances, see, up to this, we are into standard costing. Now, if I just click here, so this is the standard costing. You can see this 34,457 is my standard costing, right? And if I just want to click on the periodic unit price, this is called actual costing, 33,082. So between the standard costing and actual costing, how this is being calculated is because of this variances. You can see 17,874 is the variance which is utilized for the purpose of calculating the actual costing. Now, if you see this total quantity, it is 13 quantity. This is the standard value. This is the variance. If I summarize these two, that it is coming for 4,30,075. And if I divide by 13, then the new price is 33,082. So in place of 34,457 as my standard cost, my actual cost is coming as 33,082. And this actual cost will be utilized for my valuation of inventory as well as my COGS if I am going to sell this material to the customer. So this is how the standard costing and actual costings are differentiated and compared. Now I'll just show you the cockpit of actual costing. So this is called actual costing cockpit. Here the steps are selection, preparation, settlement, and closing. So till now we have done up to the settlement. The closing we can do, but for that closing, system can do only after the month is closed. For example, this is the 6th period. So today we are on the last date of the 6th period. So now we cannot run this. After the 6th period is complete, we can run that postings. But till settlement, we can run and check the actual cost. So this is what the actual costing, and this is one of the best feature in HANA. We should always check the feasibility and you can say the applicability of this actual costing for our own purpose.
Sharath, one question. This thing is the standard cost and all those things we know that it is updated at the material level. Regarding this PUP price, whatever is shown in the CKM3N, can we see that one in MM03?
In MM03, you can see after I do this step, mark prices. This
Okay, but yeah, that is the actual PUP. But initially, right now, what it will be showing? It will be showing which price now?
it is the standard price.
It is
Through
standard.
Material Master, you can further come to the CKM3N also.
Okay,
Okay.
fine.
I'll show you.
Sure. Okay.
Okay, so there is a tab there. In
Mhm.
counting one, there is a tab called material price analysis.
Yeah.
This price is not updated here. You can see this price here is same standard price, 34,000. But
Mhm.
the periodic unit price is updated here under the periodic unit price column.
Hmm.
You can see 33,082 is updated here. And if you want to see the breakup of this, you can click on the material price analysis. It will take you to the CKM3N only.
Okay. Fine.
33,082.
Okay.
Right?
Yeah. And once actual run is done, that time this price will be updated, right? Inventory value and value per unit price, which is showing as 430,075 right now.
Correct. Yeah.
Okay, fine, yeah.
Okay.
Yeah.
Now we'll just give you some explanation about this costing process and method. So basically, see, RMPM should be in moving average price, semi-finished and finished should be in standard price. That is very clear. Actual costing normally applicable for SFG and FG, right? Then the costing process is that first we have to do the standard costing and then we can go for actual costing. And in which business scenario we should go for actual costing? In production scenario, we should go for actual costing always, if it is a production scenario. But in a scenario which is very, very simple, where there is only one raw material and one SFG or one FG, okay, with low complexity and maybe the products are also very limited, 10, 15 kind of things, then unnecessary we do not recommend to go for actual costing that way. So depending on the complexity and depending on the requirement, we suggest standard costing or actual costing. Is that clear? So since we know the actual costing and the benefit, it is not that we should apply actual costing everywhere. So till now, the standard costing and actual costing through SAP, and I have shown you the live system also. Is it clear to all of you? Can you put a yes in the chat box if it is clear, or if you have any question, you can always ask to me. I think it is clear. Now there are two types of distribution, assessment and allocation, two types of allocation, assessment and distributions. So we always prefer to go with assessment approach because assessment approach is always better. It is not disturbing it will not disturb the financial trial balance in my GL and cost centers, and it is comfortable and it is easy to identify the allocated cost versus the direct cost. But in case of a distribution, that got mixed and the GL and CC balance also get disturbed in the financial reporting. So we always recommend to go with assessment approach for allocation of cost. But in any way, if you are using distribution for any of the process, you either change to assessment or rethink whether you should be using distribution or not. So this is what the purpose of this particular slide of this.
Sharath, any change in allocation cycle after S4 HANA?
Not exactly. The concepts are more or less same. No major change in that.
No major change. Yeah, okay.
So normally the mistakes we make, or in a company where we work, we do not pay much attention to the reports. Normally, in most of the places, we skip the month-end closing steps. I'm not saying 100 out of 100 companies make these mistakes. Maybe 100 out of 70 to 80 companies make these mistakes. If 10, 20, 30% companies are not making mistakes, then they are getting the right costing process in the system. And then third, they're not reconciling their costing reports with financial TB, which they should do, and not checking under and over absorption of cost at the cost center level. So the cost centers, what we use for booking, once it is created and booked, then we pay hardly any attention whether how much is booked, how much is not booked and all. So that is also one of the key points which we normally missed. And then if everything is not being done, then we continue to prepare everything in the Excel. And we feel that Excel is the best. We can do anything in the Excel. System has a lot of complexities and rigidity and all that. We claim and we be happy in Excel only always. Even after spending lots of rupees, lots of efforts, we still feel that Excel is much better than SAP. And we continue to work on that. So these are some of the mistakes we normally make, and these things not only stop our growth, our knowledge, our work, but these things stops the growth of the entire company as well. The kind of things we can do in 1 minute, we take 1 day. The kind of things we can do in maybe few seconds, we take few hours. So these are the kind of price we have to pay if we are not paying it correct attention to this. And companies spent crores of rupees on the software, SAP and all that, HANA and everything. But we remain in Excel and we try to make it Excel more user friendly by putting a lot of formulas in that. So this is what the mistakes we should try to avoid if we want to be more user friendly and correct reporting system. Is it clear to everyone, or anyone would like to share anything? I think it's clear to all. Then from the migration side also in HANA, 1 or 2 steps are being added now. So first and second steps are common because we have to release the cost estimate after the master data and everything is done. But in HANA, once we are going for actual costing, we need to change the price determination from 2 to 3 and also price control from V to S. And after that, we need to check that in the CKM3N report, which I just showed you now. So these are the 2 steps we need to check. And this last step is kind of a, you can say, report checking, and it is only for sample material you can check. But the third step, you need to do it for all the material. So this is the kind of a migrations we need to do. And we have to be very, very careful while we doing the migration in that. We should not miss that third step. If the third step is missed, then the entire actual costing piece will be on a hold. So let me show you in system what is that 2 and 3. So this is 3. Normally, if you keep here 2, 2 is transaction based and 3 is single level, multi-level. So if you keep on 2, then system won't work on actual costing. It will remain on standard only forever till the time we make it 3. So it is always preferred or advised and recommended to make it 3 at the start of the system itself. So these are some of the kind of common mistakes which I thought if I share, then we might take care and avoid while we are doing any migration in future. These are the points which I thought of covering with you. So now coming to my agenda, these are the topics which I planned for today's discussion, and I thought of sharing my quick knowledge and quick experience with all of you. So this is what I did. And now the balance time I am keeping it for any discussion if you want to do anything on that.
Oh, what I feel like in cost center accounting and all, as we said already, not much change, but material ledger has become a mandatory and actual costing is an optional. So that is the one which is majorly changed. Apart from that, anything changed in cost center accounting, profit center accounting, not much, right? Except the secondary cost element and primary cost element are like not there, right? Now it is a different one. Except that nothing much changed. Or how is that?
Secondary and primary cost elements are also there, but in ECC we used to create secondary cost element separately in KA01, but now in HANA it is everything in under FS00.
FS0, yeah, that's true. And this is the one. What about this one, tables and all that one? Now tables, ACDOCA, I know that, but hardly I have seen any things in that one. Still, I use the old tables like COSP or AUF, AFPO, AUFK and all those things only.
No, we should be always using ACDOCA table now. Reporting any logic, building anything, because this is basically universal ledger table. And
Okay.
ACDOCA is the best table in HANA. You should always use ACDOCA. And apart from ACDOCA, there is one more table called MATDOC.
MATDOC, yeah.
That also you should be using for any reporting or anything other than MSEG or MKPF. You should start using MATDOC.
Mm-hmm. Okay.
Yes,
Sharad ji, I have a question.
yes,
Uh,
yes, sir.
uh, now that the costing COPA and accounting COPA are merged and there is only one single COPA in HANA, of course, the client may have an option to actually go for a costing COPA separately. But in case the accounting COPA is what the client follows, in that case, is it necessary to have a kind of a reconciliation between costing ledger and accounting ledger?
Yes, sir. Yes, it is required because see in COPA account, even if you are following account-based COPA, the account-based COPA captures the revenue and COGS. Okay, revenue it will capture when you are billing the material to customer, and delivery when you are putting the delivery. For example, customer to revenue and COGS to inventory. So the COGS and revenue are flowing to COPA. Those things are reconciled, but the other expenditures, for example, your COGM and COGS reconciliation, if you know, then in our production accounting, we capture the consumption, COGM, etc., right? So those capturing of COGM production should be matched with my COGS. That's a separate reconciliation we need to make. My COGS in FI and COGS in COPA should match with each other. And in FI, the reconciliation of COGS is basically a group of more than 50, 60, 100 GLs, maybe. And then COGS in COPA is like 1 GL, the standard cost of that material or the actual cost of that material. So that reconciliation is one of the key reconciliation we need to make. Other than that, if you want to match your complete financial trial balance with your COPA trial balance or COPA P&L, then whatever the expenditure you are not taking for your production accounting or inventory valuation, for example, your royalty, discounts, freight, these things normally we do not take as a part of my billing, neither we take as a part of my inventory cost. So those things we can further allocate from cost centers of FI to COPA of account based. So then your financial trial balance and COPA trial balance will talk to each other and will match.
Understood. Thank you.
Great. Thanks for your question.
Sharath, one thing is PUP we have, and cumulative unit price is also there, right? And it is used for what? 3 months? At least in few projects, I'm just seeing they are doing it for. What is the use of that one?
See, normally, if you see, PUP is periodic unit price, and as you said, cumulative is for 3 months, 6 months, 9 months, 1 year, like that, right?
Yeah.
So you can always run that cumulative actual costing for that bucket of months. Then whatever the price it will be derived, it is called cumulative price.
But it will be not updated anywhere, right? Or we will evaluate our inventory with that, or what is that? I mean to say, the main purpose of it, yeah.
See, the cumulative prices, if you are using for valuation of inventory, the accounting entry will be posted separately other than your regular inventory account. Okay.
Okay.
And that price will be available for you to use as your marking and standard price from the next month onwards. That is still available.
Okay. So this cumulative price is same as alternative unit price, or it is different?
More or less same.
More or less same. Okay.
The names are different, otherwise that is same.
Okay. So those companies who are going for actual costing, it is necessary for them, apart from this running this actual costing, they have to run this cumulative unit price, or it is their decision?
It is their decision. Cumulative running is not mandatory for that.
Okay. So in ACDOCA, you mean to say I can see all the like product costing? Means I tried to see that one, but I hardly used it. The product costing instead of KEKO or COSP table, I can see all the cost estimation and everything in the ACDOCA.
Correct. Everything you can see in ACDOCA.
And what about this CDS views reports which has come newly?
TDS view is basically compressed data structure. So if you want to compress particular file table and you want to create your own view, create that. And it is a type of a table only, but in a compressed manner.
Okay, fine.
I think we are done with all the questions. If no one has any other questions, thank you for joining this webinar. And I have given my time for you to clarify your doubts and take you through the concepts which is very trending in the market. So feel free to connect with us if you have any further points. Thank you very much for your time and your patience to join and hear from our side. Thank you.
Thank you.
Thank you, Sharad. Bye-bye.
Thank you.
Thank you.
Thank you.